everybody. Wednesday morning, welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Focus, and everybody had a phenomenal day yesterday as we did see a little bit of a pullback in our markets overall, continuing our downward trend. Let's go ahead and do what we do, taking a look at our major markets for potential breakouts and turning points. So starting with the S&P. So looking here at our ES, I want to move to a bigger picture time period for just a moment. And slide out to the daily. And the reason I want to slide out to the daily is because we're coming to an important area in the daily. And really what we're coming to is these prior daily swing lows. And these two prior daily swing lows are important areas. The last time we came down here, the middle of December, we were unable to create a new low, which was formed in early December. And so lower swing lows on the daily chart are definitely, a continuation of weakness, but more importantly than that is looking at it on the weekly chart. And the reason that I look at it on the weekly chart is because notice that we have a swing high overall right here in our S&P. And that swing high basically held. We touched just briefly below it at the end of November, but we were able to stay above that swing high. And so I've got, you see that I have an alert there, because that alert, 44.99, we get below that 4,500 number. And that's really where I'm going to start paying attention to some longer term bearishness, deeper pullbacks, if you will. I mean, we know that our momentum on the way up has been slowing. And historically, February is a fairly weak month, and January is typically fairly strong. That is not what we've seen so far this year. Noticing that we've got some really strong down days. Yesterday, certainly notwithstanding being a very strong down day, was a really big move down. Now, the other sign of weakness that we have is that our hammer candle, which formed on January the 10th, was unable to give us any true follow through. There was no true follow through. We got higher than that candle's high, but we were unable to thrust to a new all-time high. And so in doing so, that tells me that we've got some continued weakness. Now, in market pullbacks, you typically see big bounce days built in. The question is, do they go up on higher or lower volume? And right now, we're not seeing an increase in volume on the rallies. So now what am I looking at for a potential reversal point? Well, if we get a pretty strong rally today, and we're already up 20 points, but if we get a pretty strong rally today, I've got to take a look and say, where are my areas of supply where I believe the market has a good possibility of turning down? And so the area that I'm going to look at right here is this 4630 region, because that I believe could be a really strong turning point. Now, the reason I like that as a potentially a strong turning point is this area over here to the left was a prior area of support, right? We had a nice bounce off that area. We hit it again. We broke through it, got a little messy, over the holiday weekend. And now we chopped above it on Sunday, and now we've dropped below it with a nice little level of supply here. So right there at 4630 by 4637, I think is a really nice, clean area. Now, if you go to a 15-minute chart, there's actually a level that we identified yesterday that we were talking about on our Discord server. For those of you that are tradersarmy.com members, or even if you're not a member, all you have to do is just follow the Traders Army Discord server. We do have a little 15-minute level here that I think could be used as a nice little 2-to-1. Just a nice little 2-to-1 day trade. Could actually go a little bit more than that. It could be where we reverse and start to head back. But you can see it's a little tiny wick over wick below a pivot high. So keep an eye on those two areas today, and we're closing in on the first one there, which is 4608 by 4611. Obviously, your stop has to go up above the pivot. Looking at the NQ, we're seeing that low of 15050 where we had bounced off of. Now, I will say that in the NASDAQ, we have that similar area of supply that we do in the S&P, formed about the same time, but it's already been tested, and we've moved away from it. So I don't know that I would want to try it again in the NASDAQ. The NASDAQ's up almost 100 points early this morning and seeing a bit more strength. So as it stands right now for the NASDAQ, I'm not really going to add anything to the NASDAQ. I don't really want to get long at the moment. In a 4-hour downward trend, I don't want to jump in front of a moving train and get long. but I do want to pay attention to the fact that we could get a bit of basing and a breakout to the upside. And if we do get that breakout to the upside, I think the NASDAQ is going to be your better opportunity if we get the right amount of basing. Taking a look, and we really haven't found a lot of strong trading opportunities in the Russell and the Dow. They've not been as clean as our other markets, but we will take a look at the Russell 2000. And you know, when I look at this on a 4-hour time period, I mean, our trend is just so clean that a little rally back up, and I don't use the 4-hour for levels all that often. Right, the 4-hour is not for levels in my trading style. The 4 hours to tell me, am I a buyer or am I a seller? But that being said, there's a really nice level right here. I mean, this is one of those base drops below a pivot high that are usually, in my mind, magnets for price, and that's 2131 by 2144. And once again, if these levels are too wide, you can certainly do the micro contract to allow you to engage in this market. Speaking of micro contract, let's go take a look at our crypto futures markets. And looking at our crypto futures market, starting with Bitcoin, our micro Bitcoin level. Now, I did have a little supply area in here that did get blown through. And so the next area that we see is this one right up in here. We're actually coming into that level right now. But overall, I'm seeing a fair amount of sideways price action. It's not a very strong price action. So as long as we hold above 40,000, I think we're gonna. There's probably not a whole lot of great trading opportunities. Same thing when I look at Ethereum. Although Ethereum is definitely more in a bearish sense than Bitcoin is, the mini Ether futures here, micro Ether, excuse me, does have a pretty decent supply area right there at about 3150, where I think we could see a little reversal off of that 3150 area of supply. Taking a look at our crude oil markets. So looking at our crude oil markets, we have a bit of a double topping pattern here. This is actually a pretty strong topping pattern. And I'm not saying that the markets have stopped going up by any stretch of the imagination, but on the hourly chart, that actually is a bit of a topping pattern, where we are seeing, the rounded top the first time, second time through. And so I think that provided that we get enough basing, you may actually get a little breakdown trade today below 85. Below 85, I think you can get a breakdown. Remember, you're going to want to go look for the closest pivot. And so right now, your stop would have to go way up here, right? So you basically would have a $1 stop at this point. So you need price to make it down to 83. I'm not saying that it can't. But if we bounce off of here one more time and we get a closer pivot, that's actually going to be a better entry than taking it on the breakout right here, because your stop has to go above the prior pivot, which in this case is way up here at this candlestick. Taking a look at gold. Gold, we had a really nice drop into our demand area, got a pretty strong move away, and so now that level, since we traded all the way to the bottom, is used up. And I don't really have anything great around me. Most of these are areas that I would consider very wicky, lots of extra wicks that are not in fighting, right? They're not giving me an opportunity to jump in. I think about these very wicky price areas, and these very wicky price areas mean that there's a lot of indecision in each individual candle, and I just don't want to be involved in much of that trading. I want to stay away from it. So I'm going to hold off on anything in gold for today. Take a real quick look at our euro markets. When I look at my currency futures, we had a decent area of demand here that blew right through like the proverbial knife through butter. And so our next area of demand is this area down in here, although I wouldn't say that that's an amazing level. And when I look at the 4-hour, my 4-hour is, we had some strength, and then that strength really sold off very quickly. And so now I think that you've got a decent area of supply right in here on this wick over wick area. This level here we came close to without giving us really a clean entry. I'm going to remove it at this point since it's pretty far away. I think this 1.1394 by 1.1405 is probably a a pretty good, pretty safe entry. Prior area of support. It's kind of the area where we had that breakout here with this big expanded range green candle. Could be still a decent reversal there. Looking at the Canadian dollar is just moving sideways, right? Not a whole lot there to lean on. Potentially a breakout above this 802.85, but I don't see a whole lot in there. The New Zealand dollar, a little bit more in the Kiwi. Certainly some demand areas that, as we fell, broke through, but we did get a little bounce off this demand area. Question is, would we get it again? And I don't know that we necessarily would. Let me remove some of these prior drawings. And as I look at this, I see this area right here as a potential reversal at 682, as well as the pivot up here at 6842. I think the upper level is probably going to be the safer one and the way to go. And so I'm not going to add this bottom level here. I don't think that that's going to be as powerful as what I would be looking to find a trade. And then I don't see a whole lot else on those other markets that is making me jump up and down. So as far as the stock goes, one of them that I had looked at last week that I wanted to just revisit again today was Salesforce.com, and I think Salesforce is still a contender to continue to fall. The earnings that came out was a strong catalyst on a drop. If I look at this on a weekly chart, I think we could continue to drop down to around 200. If we look at where we are from a volatility standpoint, and I take a look at our Traders Army implied volatility range, we're right in the middle of the range, so it sets up really nicely. I'll just move that to a daily, excuse me. We're actually in the higher part of the range. Either way, it sets up for a spread, and I'd probably be taking a look at a bear put spread as really the best way to go in this instance. And then another one that we've looked at from the bearish side recently has been ROKU. As ROKU is continuing its trend back down, it would be nice to get a little bit of a bump back up today to allow us to re-engage on the short. And I think if we got a little bit of a bump back up to let you jump back into the short, that would be ideal. I don't think it's going to get that high, but right up in this region here where we have a little bit of chopping sideways would be a great chance to get back in. Obviously, our implied volatility on ROKU, taking a look at this, is really high. So, selling a bear call spread might make a little bit more sense in this instance, or definitely some sort of option selling strategy is going to be the way to go. So that's all I have for today. I hope you guys had a phenomenal day trading, and today is a good one. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.